The real question is, at some point, you have to figure out how to pay for that, right? So the Biden administration is facing this large looming question of how do we pay for all these programs, and how do we figure out how to slow down the deficit that has recently been created.
What are you seeing in the 1031 world? What concerns you? And then let's dive into maybe, what's the outcome of these things?
For sure. Great question. I think there's a number of headwinds that are facing real estate investors today, both at the local and federal level. Everyone has a different local level, so I don't want to dive into that too much. But at a high level, California or other places that are facing housing issues are trying to figure out how to regulate some of the Airbnb, putting some restrictive controls around that. Other states are trying to put rent control in place. And so that's one headwind. But at the federal level, Biden has come out, the Biden administration, they need to figure out how to fund some of the things that they want to fund. Many people don't know, but the amount of money in circulation went up by approximately 40% in 2020. The St. Louis Federal Reserve actually tracks that. They discontinued their tracking because it went up so dramatically recently. I'm not sure exactly what the rationale was behind that, but where they stopped tracking it, there was 40% more money out there. So that was issued by the government for the most part, right? Secondly, the Biden administration wants to do some really potentially cool and interesting things, where eliminating student loans for some folks, going in and making healthcare more affordable than it already is, making it more available than it already is. But the real question is, at some point, you have to figure out how to pay for that, right? So the Biden administration is facing this large looming question of how do we pay for all these programs, and how do we figure out how to slow down the deficit that has recently been created. So they've come out and had some language around different parts of the taxation. I've paid primarily attention to things that affect real estate investors. So the kind of key things that affect real estate investors today, first of all, Biden recently came out and said he wants to increase the long-term capital gains rate to be higher than the highest short-term marginal tax rate. He said he wants to increase it. They're going to propose, which they haven't yet. He said he's going to propose a highest tax bracket, long-term federal capital gains of 43.6%. So that'll raise taxes on long-term real estate investors or any long-term investors by approximately 23%. So that can be aggressive. Secondly, Biden has said he wants to potentially limit or remove 1031 exchanges for people. He originally came out about this time last year and said he's going to remove it completely. He then came out last September and said he's going to remove it for anyone who makes over $400,000 a year adjusted gross income on their tax return. And then most recently last month, he came out and said he wants it to be ineligible for anyone who makes over $500,000. So again, these aren't things that have happened. These are things that are potentially going to be proposed. And there may be some loopholes. How do you define a profit of $500,000, right? Do you cut your property up into multiple properties? Do you potentially be able to play with debt? And I'm not sure how that's going to be defined, but I do think it's potentially going to be a little bit more challenging in the future to do a 1031 exchange. So, one of the things that I talk about with people that come and ask me for advice as they're planning is, we don't know exactly what's going to happen. However, if you're looking to potentially do a 1031 exchange in the next 1 to 5 years, it probably makes sense to evaluate accelerating that timeline, because the worst case situation that no one wants to be in is to turn around, need to sell the real estate asset that you've deferred taxes on for 15, 20, 30 years, suddenly be in a situation where a 1031 may not be eligible for you, and you're looking at a really aggressive taxable event. If you're in a tax bracket of 43% long-term federal capital gains, then you're also in a state that charges state income tax. California is about 10, Colorado is about 4. Many other states have some type of state taxes. You also have a depreciation recapture tax where you have to pay back 25% of whatever you've depreciated. So if you've owned a property for 10, 15, 20 years and you depreciated it considerably or fully, that can add an extra 10, 20, 25% tax burden. So, if you were to look at a situation where, you've got 25 years of built up tax deferrals and you fully depreciated your asset, you might be in a 60 or 65% tax bracket. And that's heartbreaking. That's, a terrible place to be. So, for folks that are looking to potentially do an exchange, I think with good data, you can make good decisions. With bad data, you make random decisions. It makes sense to evaluate moving up that timeline.
Yeah, just staggering stats there. And you said